Hello everyone, here's the weekly tax update. Huge tax increases proposed this week by the Biden administration. They just recently proposed their 2025 fiscal budget, and in that fiscal budget, they proposed a slew of tax increases. Those tax increases include an increase in capital gains tax, an increase in Medicare tax, increase in corporate income tax, a billionaire's tax, also popularly referred to as the Buffett rule, and also the most controversial one, a tax on unrealized capital gains. I'm going to go over all 5 of these things, and then I'm going to tell you what I think. The first one was a capital gains tax. For those who aren't aware, capital gains tax is when you pay tax on the income you make from selling a capital asset. Capital asset is like selling a stock, a bond, you sell your car, an antique, you sell cryptocurrency, you sell real estate, you pay capital gains tax. And long-term capital gains tax is when you hold that capital asset for 1 year or longer before you sell it. Now, right now, the top rate for capital gains, long-term capital gains tax, is 20%. But the new proposal that the Biden administration has come up with is a 39.6% tax on capital gains for anyone who makes $1 million or more. Now, for most people who are middle-class America, they're trading stocks, they're not going to worry about this. However, you may have a one-time event, like let's say you've built a business for 5 or 10 years, or maybe you're an employee at a startup and then your shares mature or the company sells and you get a payout. You may in that case have a one-time huge payout, and then you're going to be subject to this new 39.6% long-term capital gains tax. Because when you sell a business, usually most people break $1 million, especially if it's a business that's been thriving for many, many years. So that's the first increase that Biden was proposing, part of his 2025 fiscal policy. The second tax that he talked about is an increase in the Medicare surcharge tax, also known as the Obamacare tax or the net investment income tax. This tax gets triggered when you have interest income, dividend income, or if you have sale of a capital asset like long-term capital gains. Now, right now, the surcharge is 3.8% if it's over $250,000. What Biden is suggesting is we raise that tax from 3.8% to 5%, and the new threshold be moved from $250,000 to $400,000. So what this will do is if you have a giant liquidity event, like selling your business or cashing out stock from a business you've been an employee in for a long time, your long-term capital gains will be 39.6 plus 5%, so you're essentially paying 44.6% tax. And that doesn't include state income tax. So if you're in a state like California, you're going to have to pay another 13.3% on top of the 44.6. So you're closer to almost 60% in tax. The third tax that Biden was proposing, part of his 2025 fiscal budgetary policy, is an increase to the corporate income tax. Now, the corporate income tax before the Trump Tax Jobs and Cuts Act was 35%. He dropped it to 21%. So Biden is suggesting that it gets moved from 21% up to 28%. Now, that's not as bad as the 35%. But the other thing you need to keep in mind is that in 2 years, at the end of 2025, the Tax Job Cuts Act expires. So that corporate tax rate is going to go up to 35% anyway. So that one I don't find as egregious as the other ones, But still, in the short term, if you are a C corporation and you're expecting to pay 21%, it's not going to be fun knowing you're going to pay 28%. The other thing that he put into the corporate tax is right now, if you have earnings from foreign income, your tax is 10.5%. And he's suggesting in his budgetary proposal to double it to 21%. So once again, this is for big C corporations, and they're the ones that are going to have the brunt of this foreign income tax and of the raise in C Corp income tax from 21% to 28%. The next tax that Biden proposed in his budgetary policy was a wealth tax, also sometimes referred to as the Buffett rule. In 2011, Warren Buffett was famous for mentioning that his secretary paid tax at a higher tax rate than he did, even though he made way more money. And the reason for that was her wages were gained as ordinary income, which is a higher tax rate than the way Warren Buffett makes all his money, which is off dividends and stock sales, which is a long-term capital gains rate. So 10 years later, after Warren Buffett has first mentioned how his secretary pays a higher tax rate than him, during the State of the Union address, President Obama mentioned that there should be a minimum tax for wealthy billionaires. As part of Biden's new proposed budget, he would like a minimum tax for anybody with a net worth over $100 million to be at least 25%. So it's almost like an AMT tax, which is it gets triggered if you have a certain net worth. Now, this is all on the heels of a recent poll that came from Bloomberg, where they were polling a bunch of people in 7 swing states regarding how to make up the shortfall of Social Security. And the poll results showed that out of the options of taxing billionaires, raising the retirement age, having a different calculation for Social Security, or increasing the payroll tax, the overwhelming majority of them, 77% of them, had rather have a new tax on wealthy billionaires than any of the other options. And those were in the swing states and battleground states, so it kind of shows you where the pulse of the country is heading. One of the last taxes that Biden had in his proposal, and the one that's getting the most interest all over the internet, is something people are referring to as an unrealized capital gains tax. So normally with capital gains, what happens is you sell the asset, you make the money, you pay the tax. The way it's being spun on TV and in the news right now is that you would pay a tax on things you haven't sold. That's not entirely true. It's actually written more as an inheritance tax. So it's an unrealized gains tax that would happen upon death. So what they're really trying to do is create a tax on inheritance. Now, they mentioned that there was going to be a certain threshold of wealth that people had to have in order to trigger this tax on unrealized gains. Because as the tax code is written right now, if I buy a house for $100,000 and then it's $1 million when I die and I pass it to my kids pay no tax at all, and it's as if they bought it for $1 million, not the $100,000 I paid for it. Same is true with stocks or any other capital assets. What Biden is proposing is that when a person passes away, their estate will need to pay that tax. And it's not known whether or not what the threshold is going to be for these wealthy people that they're proposing to have this inheritance tax, or what the public is referring to as unrealized capital gains tax. So we're going to have to wait and see. My opinion of all this is a lot of this stuff I don't think is going to pass, especially the inheritance tax or the unrealized gains tax. If you've ever read the book by Chris Voss called Never Split the Difference, the reason he says never split the difference is that in negotiating, one of the things he mentions in his book is that a lot of times someone will come up with a really, really high offer. So that way, if you come forward and you say, well, let's meet halfway, well, that's what they really wanted. That's what I think is happening with this proposal. I think the Biden administration knew that most of this stuff, they're not going to get it through, but they wanted to make it so egregious so the public would be so upset that later, when they come back to get something approved, they'll be able to come halfway and get what they wanted. As always, I'll keep you guys updated with any other changes that are coming up or if anything passes. Keep in mind, this is just a proposal. It's nothing defined yet. It's a proposal and Congress has to vote on it. And as it stands right now, because of the deadlock and because we're going into an election season, it's a lame duck session. This is not moving anywhere right now. Thanks a lot. Hey guys, I hope this video was super informative for you. If you liked it, please do me a favor and subscribe. Also, there's a link in the notes below to sign up for my newsletter. I give cool tips about taxes every couple weeks. And you can sign up either below or at taxstride.com. Thanks.